This video is for reading 60, which is entitled Policy Steps Towards Closing the Gap. And there are a lot of authors for this reading, so I won't be listing those. So, what gap is the reading looking to close and between whom? So, this reading is largely about the wealth gap that exists in the United States between white non Hispanics and communities of color, particularly. Native Americans, African Americans, and Latinos. You can see if that graph that at least compares white non-Hispanics, Black non-Hispanics, and Hispanics. That's the average family wealth from 1983 to 2010. And as you can see, there is a really sizable gap that doesn't really seem like it has diminished, and if anything, has increased between whites and these communities of color. So this reading is about, how this gap can be addressed and what's needed to close the gap. The first step that the authors identify is what they call human assets. The first human asset that they focus on, and another way of thinking about this is human capital, is education. So they discuss the ways in which education contributed to whites having an advantage over communities of color in the United States. And certainly there is a historical, aspect to this, right? During slavery, African slaves were forbidden to read and write. Then during the Jim Crow period, they were taught in the South in segregated schools, schools that were segregated by law. In other parts of the country, oftentimes they were in segregated schools, even if it wasn't segregated by law, de jure segregation, but what we call de facto segregation, meaning they went to schools based on their neighborhoods, and those neighborhoods were oftentimes segregated due to differences in finances. So, for a very long period of time, there was just segregated schooling, particularly directed towards African Americans, although other groups as well, Latinos, Native Americans, particularly those Native Americans who grew up on our reservations, also experienced non-equitable schooling. But the authors don't just focus on the historical, contributions to the gap. They also go over some of the current day contributions. And then when they discuss the kind of contemporary contributors, they try to offer what they feel like might be some solutions there. So, for instance, they talk about the disparities in K through 12 funding, and the fact that because schools are oftentimes paid by local property taxes, people who grow up in wealthy areas then also have public schools that are nicer, that have better compensated teachers, that have better facilities, that have more resources, and that one thing that they suggest is that more federal dollars should be addressed to kind of try to level those disparities. Another issue they talk about is that even though college education has become even more important to get a job with a decent wage, largely because of the loss of unionized jobs in the manufacturing sector. At the same time, there is now a lack of affordable higher education. The cost of higher education has skyrocketed comparative to what it was, 75, even 50 years ago. And even though aid is offered, a lot of that aid is loan based as opposed to grants, which of course just saddles students with a lot of debt. So, the authors really push this idea that, public institutions need to be made more affordable, and that student aid needs to go back to being more grant based than loan based. So people, don't necessarily have to bankrupt themselves as adults by seeking out, higher education opportunities. And then they also discuss, the availability of English instruction classes, particularly English instruction classes for non-children. The availability and the accessibility of those types of courses, particularly those that are either free or are low costing, they aren't necessarily readily available, especially in a lot of parts of the country. And so this really hinders immigrants who, either, do not speak English or do not speak, are not English literate well enough to get a good job. And this increases the likelihood that they're going to be stuck in bad jobs where they are, possibly exploited. And so that is kind of their addressing that gap in education and educational opportunities for them is the first step. Another human asset that they kind of touch on, but they don't discuss in as much detail, is health. There is a relationship between health and finances. Both, people need to be healthy in order to work, but also when you are unhealthy, when you, are sick and you need to seek out medical care, this can be really expensive, particularly if you don't have insurance. But at the same time, insurance is not cheap. So people who don't make a lot of money are kind of put in, a bad position, what we would call a rock and a hard place. They can either, spend some of their limited money on health insurance in order to protect them in case they have an accident, in case they get really sick, in case they need to seek out medical care. Um, uh, but that does require them to pay that insurance premium, or they can run the risk of not having insurance, which, of course, keep in mind that is something that we now have in this country as an individual mandate. So not failure to have insurance, would definitely result in a financial penalty. But also failure to insurance can really be financially devastating if you do find yourself, with a serious accident or illness requiring surgery. The cost without insurance, the cost with insurance is oftentimes expensive, but the cost without insurance is usually, is just insurmountable. And they talk about the number of people, that find themselves having to declare bankruptcy for healthcare cost related reasons. And so their proposed solution there, this shouldn't be surprising given how often it's come up recently in political debates, is, talking about, how universal health coverage in this country would really help, not just, well, it would help everyone, but particularly it could help lower income people who are a larger, disproportionate number of whom are people of color. Having this universal coverage would definitely be beneficial for them, because it would grant them that human asset, that it would grant them their health, without costing them, without costing them, the money that it currently costs in order to have healthcare coverage and to receive healthcare services. The next focus on the reading deals with income assets. So income, of course, is the money that you earn, by working a job. And jobs are important because this is the primary way people earn income in this country. And there is a relationship between income and wealth, because your job provides the cash income needed to cover day-to-day needs. But the hope is also that your job, provides you with enough income that you have something left over to build savings. And it is that building savings that is kind of the first building block of financial wealth, right? So if you don't have a job that provides you with sufficient income, you aren't going to have savings, and you are not going to be able to build wealth. And so once again, they kind of acknowledge the fact that there are historical contributions to this gap, from African slaves to Latino day laborers, people of color, have been denied fair compensation for the jobs that they work. They have been limited historically to jobs that usually white non-Hispanics did not want to do. There's a very long history of people of color being excluded from a lot of unions, which meant they did not get to enjoy the benefits that unions provided back when the manufacturing sector was strong. This was part of why factory jobs were considered good jobs, was because of you know the presence of unions. But as I noted, many unions back then did not allow people of color to join. Um, and so all of this, the historical contributions are there, but once again, can't necessarily address the historical contributions, or can't easily address the historical contributions. So the focus is on those current day contributions to the gap and what can be done. So, really the first thing they kind of address is the fact that, like, a lot of jobs in this country just don't pay enough. There is the federal minimum wage. Um, and if you're lucky, perhaps if you live in a state that acknowledges it has a higher cost of living, or you live in a city that has a higher cost of living, perhaps you live in an area where there is a state minimum or a city minimum that exceeds the federal minimum. But the federal minimum wage just basically says you can't pay people less than this amount. And, it's that amount has not kept up with the rising cost of living in today's society. The minimum wage, and wages in general have stagnated, while the cost of everything else has largely inflated. And that means that, what most people who work, particularly people who work in some of our customer service, those types of that sector of jobs, as opposed to having a living wage, a wage that reflects the cost of living in their area. Instead, they go to work 40 hours a week, sometimes significantly more, and they are barely above the poverty line. That's why we refer to that group as the working poor. And so, one solution that, the authors pose is that, the minimum wage needs to reflect the living wage in given areas. And they raise the point that, this country has never considered a maximum wage. And certainly we can look at our high rates of income inequality and how it has increased dramatically in the last 20 or so years. And a lot of that it's not necessarily because the poor are doing worse. It's just that the rich are doing so much better than they were, 25, 30, 40 years ago. They talk about kind of the skyrocketing compensation that, CEOs now receive, even when they're fired. The amount of compensation that they receive is sometimes just unbelievable. We call them golden parachutes, right? So the idea that we can compensate the people at the top so much money, but for people who are not at the top, that, oftentimes that they can be working and not earn a minimum wage, is a concern for the authors. And they raise the possibility, why would we, one way in which we could maybe have more money to pay, that companies could have more money to compensate their workers with, is if they put some type of cap, some type of maximum on how much, top executives earned. The second kind of current day contributor to the gap that they discuss deals with government assistance. Because people work jobs that do not allow them to, be able to live, to meet the standard of living in their area, because some people are unable to work either, short term, or in some cases even permanently. There is a need for government assistance. And largely in our country, cash assistance has largely been directed towards three groups of people: the elderly, people who have a disability, and are deemed unable to work, and adults with dependent children. If you look at the stigmatization of welfare recipients, it's rarely the poor senior citizens, or the disabled, who are most often stigmatized. It is usually people who are receiving government assistance because of the presence of dependents in their household, and they touch lightly on that when they talk about how President Reagan had the caricature of welfare queens, where he kind of planted this idea, or played up the idea that women, primarily women of color, particularly Black women, were exploiting the system by having a bunch of children that they were receiving supposedly so much money for, at the expense of taxpayers. And it's worth noting that a lot of that caricature was overblown or just outright false. A lot of people who received uh, government assistance, because they had children at that time. It wasn't necessarily that they had a large number of children, and it wasn't even necessarily that they were on the program for a significantly long period of time. Even before AFDC, assistance to families with dependent children, even before it shifted and became TANF, temporary assistance to needy families, even back then, the amount of exploitation was not this staggering amount that people thought it was. But what it did provide, of course, was a guaranteed cash sum, to help cover living expenses, largely really just to ensure that children weren't growing up homeless and hungry, or in homes that lacked electricity or heat or air conditioning. Um, but certainly there was a lot of public disapproval around the government assistance that was given to these women, which is why in 1996, under President Clinton, it shifted to TANF. And the key word in TANF is temporary. Among a lot of changes to the program, maybe the most important change was it allowed states to set a clock, with the requirement that no state's clock could exceed 5 years. And people could start and stop their clock, but ultimately, once they reached their state's maximum, they were no longer going to receive cash assistance. Now, initially at the time when AFDC changed to TANF, the country was doing pretty well. And so we didn't see like immediate, bad effects, particularly since at the same time, and in the administrations that followed, there was, increased investment in the earned income tax credit, which basically provided, uh, at tax time, it allowed people who met the income requirements, people who were lower income, they worked, and then the government matched a certain amount of the money that they earned, giving them a pretty sizable tax refund, that they could do things with, like invest in education, buy things that they need for the home, pay their daily living expenses. So if you were at least a member of the working poor, what you lost from AFDC was probably offset by what you gained from the earned income tax credit. The people that really were hurt in the shift were people who, for either personal reasons, were unable to work or work consistently or work full time, or people who live in areas where there isn't a lot of economic opportunities, and and they aren't necessarily the most desirable job candidates, being oftentimes low income women of color. They're not necessarily the people that employers are most apt to hire, especially if it's during an economic downturn in a tight economy. So, the EITC is really only helpful if you have a full-time job. It becomes decreasingly helpful if you don't work full time, and it's not helpful at all if you don't work. So those are the families that found themselves sinking deeper into poverty. Other current day contributions to the gap, obviously, issues around citizenship. If people are in this country and are undocumented but are working, this puts them in a very kind of tenuous position where they can be exploited and underpaid or not even paid at all. Human trafficking, although we oftentimes focus on sex trafficking, it's actually labor trafficking that occurs even more. And the correlation between labor trafficking and people who have entered the country without documentation, that correlation is really strong, because these people are oftentimes just very, like I said, vulnerable, because they lack citizenship. This means that, whether they are being barely paid or being put in dangerous situations on their jobs, they don't have a lot of room to complain or to demand better. So certainly the authors discuss how providing people a pathway to citizenship would help with that. And then they kind of end this section by just addressing the fact that there is an ongoing need for affirmative action, because even though there are policies in place saying that you are not supposed to discriminate in employment on the basis of race and ethnicity, there is a lot of social science evidence that suggests that this does occur in varying ways and against varying communities of color. So just a reminder about affirmative action. I've gone over this material before. It is oftentimes has been used in either the work or school arenas. And it's a collection of programs that is meant to address the historical as well as ongoing unequitable treatment of minorities, um, uh, and originally also the inequitable treatment of women as well, in the work and the school arenas. And there are, although we oftentimes talk about affirmative action as if it's one thing, it's really been like different types of programs. So there are different types of affirmative action programs. The type that most people tend to think affirmative action is ironically the type that hasn't been in existence since like 1978, and that's quotas. And quotas is when you have actual set aside spots for people of a specific group. And like I said, this type of program has not been in existence in a while. It was deemed unconstitutional back in 1978, which means the types of programs that do exist are preferences and goals. Preference programs are say, if you have a candidate who meets the qualifications of the position or meets the qualifications to be accepted to a school, then if that candidate comes from a minority group or from a group that you have, focused on as being historically, disenfranchised in that arena, then you should admit or hire that individual over a person with similar levels of qualifications, or perhaps even a little better qualifications, if that person is not a member of that group. And so it's worth noting that, it was never, even quotas never allowed for the hiring of or the admission of applicants, of unqualified applicants. But it raises the issue of what does it mean to be qualified, And, a lot of people are uncomfortable with this idea that if a person meets a base level of qualifications, that, that they're going to be admitted, or they're going to be hired, even if someone else is more qualified. And it's worth noting that a lot of these conflicts around affirmative action, have occurred in relation to university admissions policies, but there also have been court cases related to the use and the application of affirmative action programs in employment as well. The third type of program is goals, and this is like the most flexible, the most loose, because basically it just says that your university or your company has the goal of admitting or hiring X percentage, or X number of this particular group, but you don't really have any required or specified actions that you have to take in order to make it happen, right? So it is the affirmative action program that's probably, like, the least effective at getting minority candidates hired or admitted. And so it's worth noting that it is now probably it is probably the most popular of the affirmative action programs, particularly in the employment sector, which is probably why the authors looking at that data, suggest that there is still a need for affirmative action, and more stringent, or more focused, more targeted affirmative action programs at that. The final focus is on what they call financial assets, and these are assets related specifically, to wealth building. And they note the fact that the government, historically has played a role in creating and offering those. So certainly, if you look at, some of the programs and policies that were implemented, by FDR, post Depression recovery, as well as a lot of the programs that were implemented, post World War II, the GI Bill, the Veteran Housing Authority, yeah, lots of federal programs at one point were kind of built on this idea of, if we provide people with free or low cost education and training, if we provide them with free low cost loans to buy houses in these new suburbs that we are developing, this will be good for the entire country, because we will be developing this solid middle class. But it's worth noting that a lot of those historical um, wealth building governmental programs, because of the time at which they were implemented, the 30s, the 50s, the 60s, a lot of them also um, cut out or discriminated against people of color, families of color. So that period of time where we really did see a very dramatic uptick in the number of white middle class families, we did not necessarily see that in other racial ethnic groups. So the the rest of this reading is really focused on, the government needs to go back to creating programs and policies geared towards wealth building, particularly wealth building um, among communities of color. And they discuss this in regards to four different ways in which the government can assist. They talk about asset accumulation, policies based around helping low income people save money. They talk about asset leveraging, policies that help low income people use their limited savings to get loans for larger assets like homes or businesses. They talk about asset preservation, policies and programs that try to protect low income people from predatory lending. And then they talk about asset creation, policies and programs that go beyond individuals so that entire communities can develop and create assets. So a lot of this, of course, is straight from the reading. And I will be the first to say, I found a lot of it informative because, my background is not in finance, is not in banking. Some of these specific programs and policies, beyond what is in the reading, I don't have necessarily a lot to add here. Um, the one thing that there are a couple of points that I do want to make, um, because they relate to other sociological topics. And one of those points is under asset leveraging, where they talk about, okay, how do we help low income people who have limited savings? How do we help them get loans for larger assets? So it's just worth noting that, home ownership is really important. Um, as much as we talk about income inequality, wealth inequality in this country is much greater. And for a lot of Americans, if they have any wealth at all, it's probably in their home, right? It's their home equity. And so, because, not everyone owns multiple businesses, owns, land, owns, just a robust stock portfolio. That's just not true for a lot of Americans, but certainly, traditionally, a staple of being considered middle class was you did own your home. And so, when considering that racial wealth gap, in order to understand it, you have to kind of address the fact, why do so many people of color, why do so few of them own homes? And so this brings up the concept of institutional discrimination, particularly as it relates to housing. So I want to provide a little bit more information here. So institutionalized discrimination is discrimination that's basically been enshrined in law, public policy, or common practice, and that is embedded in the routine operations of major social institutions like businesses, schools, hospitals, and government. Sometimes this institutional discrimination was, overtly racist, and meant to result in discrimination. And sometimes it wasn't overtly discriminatory, but the effects of it falls disproportionately on people of color, which means that the effects of it has been discriminatory. And when I teach about institutionalized discrimination, some examples that, we often discuss are, things like legacy admissions, in colleges, particularly private colleges, elite colleges. The concepts of redlining, racial steering, blockbusting, subprime lending. And I'm going to come back to those because they all relate to kind of housing, either banking or real estate practices. The war on drugs, which, in terms of how some policies, like the crack cocaine sentencing disparity, seem set up, largely just to increase the punishment of drug users that had low income, backgrounds, as opposed to drug users who were affluent and more likely to be white. And then racial profiling, which, whether it's the stop and frisk law, for instance, in New York, which allowed law enforcement to stop people without really reasonable grounds. And unsurprisingly, it resulted in a lot more racial minorities being stopped and frisked, than people who were not um, people of color. And so institutionalized discrimination, is important because it impacts how people are treated by the education system, the justice system, job hiring, and bank lending practices. And, people's lives are, at least how we understand them as sociologists, are shaped both by their own agency and larger social forces. And those social forces, of course, are the result of these social institutions. So if social institutions are set up in such a way that you're not being treated fairly, in this way, by no real fault of your own, your life can become constrained. It can become harder. You have barriers kind of put in your way, that you are kind of going to be forced to have to work harder to overcome, or you're going to run the risk of not overcoming them, and not necessarily achieving all that you wanted to in life. And it is those bank lending practices that I want to emphasize, here, because this is a huge contributor to the wealth gap. So the two bank related practices are redlining and subprime lending. Redlining gets its name from, back in the day, local banks would have a map of their area, and they would outline in green the areas that they felt like were safe investments that they were willing to approve loans for people if they wanted to build houses there or build businesses there. And then they would outline in red areas that they felt like were risky investments. And as it turns out, maybe unsurprisingly, a lot of these so-called risky investment areas were areas where you had a lot of minorities. And this is important because this contributed to a lack of investment in these areas. So there were less in businesses being built, which impacted people's ability to get jobs close to their homes. It impacted people's ability to, buy a home in the area they lived in, which of course, contributed to, their inability to build wealth. The lack of businesses and the lack of homeowners in that area then meant a lower tax base. And then this kind of was, this impacted, of course, the level of funding then available for the school system. And so, redlining was a way in which minority areas were kept poor. And it also, of course, meant that even if a person was a non-minority, they were white, they were an ally, whatever their motivations might be. But even if they wanted to move into that area and do investment, build themselves, it was oftentimes very hard for them to get loans to do so. Or if they did get loans, whether you're talking about the people of color who lived there or people, who were moving in, those loans were not as good. And this brings up the concept of subprime lending, right? And this is lending where basically the rate, right, the interest rate that the bank assigns your loan is so high. They approve your loan, but the interest is so high, you're basically just paying on interest. And you're not paying towards, your actual mortgage. You're not paying, towards the actual, prime amount. And so what happens is you're stuck in this loan for a much longer time, which of course inhibits your ability to, um, to save more money, to maybe do more, to invest more with your money, because you're spending more money on this loan for a longer period of time. And particularly for low income people, it also increases the odds that you are going to, basically foreclose, right? Because you, at some point, if you run into any type of financial issues and you stop making payments, you're still going to owe probably a lot on your house or business, and you're not going to be able to just pay it off. And the bank is going to come in and seize your property. And your book kind of talks about that. The reading kind of talks about that when it talks about the foreclosure rates. And so, uh, in addition, uh, uh, other contributing factors had less to do with the banks and had more to do with real estate practices like racial steering, steering people of color to communities where other people of color are living, even if they had the finances to live in wealthier areas, whiter areas in town, they oftentimes would be steered towards these more racially segregated neighborhoods. Um, and then a process called blockbusting, where sometimes realtors would actually like target blocks. After a person of color, a family of color would move in, and a second or third family of color would move in, they would start appealing to the white residents there that the block is becoming, too diverse, and they would encourage them to sell, um, and then they would then resell those homes to more minorities. And this is a whole process, all right. And this did occur, particularly in the 70s and the 80s. A term that kind of comes up in regards to this is white flight. And it talks about how neighborhoods could go from being, largely white to racially integrated to then largely minority. And then as it becomes more minority, um, people would then move in, and the cost of the housing, the housing costs would decline, and so now people have lost some of their return on their housing investment. And so all of this, of course, just kind of explains how, um, y- y- people of color are less likely to own homes, and that is a large contributor to the wealth gap. And part of how researchers and how the government found out that this was occurring, particularly in regards to the role that the banks played, is because, once the government started putting policies in place, which your book discusses, to they talk about, the policies, kind of, related to the CRA, the Community Reinvestment Act, and how the government basically got involved to investigate, how minority loan applicants were being treated. So they started doing audits of banks, and this is where we get this type of information, right? The idea that, Latinos and African Americans were more likely, to be denied a mortgage, even when their income was above the median income, or they were more likely to be charged higher interest, like I said, given those subprime loans. And this was, once again, even when they kind of met the median income of that area. So this isn't based on theoretical conjecture. Our understanding of these practices was largely based upon these audits that were done in the 70s, 80s, 90s. They're still ongoing. The federal government still investigates and tries to ensure that banks are, engaging in equitable treatment, in terms of how they, make loan decisions. So, um, the other kind of point that I want to make has to do with asset preservation. And that's, in this section, once again, they talk about predatory lending and how it contributes to foreclosure. So, they provide you a little bit more detail about what I kind of just suggested, in that previous slide. But in this section, they also talk about the significance of Social Security to the elderly. And one thing that I thought that was really interesting here, that comes up in 631, on page 631, is kind of a callback to a previous point that they made about the role of health. Um, Comparative to whites, people of color, particularly African Americans, their Social Security, because they are more likely to die at an early age, their Social Security, has a higher likelihood of being paid out to survivors as opposed to the person themselves. Because, of course, the goal of Social Security is it was a program meant to provide for the elderly. And once again, there were some historical biases there. At one point, only certain types of jobs were eligible, for participation in the Social Security program. is worth noting, that nowadays it's been expanded, um, so that uh, those occupations that were originally excluded, and a lot of these occupations kind of related to like domestic service work, like so being a gardener, being a cook, being a nanny, um, jobs that have primarily been held by people of color. But now those types of occupations are included in the social security program. And as your book notes, it is one of the most successful, it's one of the most successful insurance programs, and it certainly helps to keep the elderly poverty rate lower than what it would be if it didn't exist. And so, the book just notes that there has been a push to privatize Social Security, and the authors are against that, and they point to the lessons that can be learned when you look at what happened to private pension plans. At one point, once again, back when the manufacturing sector was strong, when unions were stronger, private pension plans used to be a very important asset. But once deindustrialization and globalization happened, and the manufacturing sector went through a dramatic decline, and a lot of the jobs that replaced it were in the low wage service sector. A lot of private pension plans just ceased to be offered to people. And even jobs that still offer private pension plans, on page 631, they talk about how the risk now falls more with the employee than the employer, right? Because they take your pension and they invest it and they play the stock market. And there are multiple cases, sad cases, of people losing their pensions. Basically, due to stock market crashes, and the employer just largely saying, hey, well, we're not responsible. And so, given the importance of Social Security in asset preservation, the authors just try to make it clear that this program is really too significant to kind of shift to the private sector. Um, the other points, that come up under this section, not that they're not important, but like I said, due to my limited, knowledge of a lot of these policies related to banking practices, I'm not going to go over them one by one. Um, uh, because I just don't have anything additional to add beyond what's in the reading. But I encourage you to read that section very carefully. And so now, at the end, the question I encourage you to consider, as the authors note, even if a lot of the gap has historical roots, there are contemporary contributing factors as well. And the solutions, of course, have to focus on the present. However, a lot of these policies and programs require the government, and it can be difficult to get voters on board. What type of information do you think would be needed to convince people to support these policies? Can you think of other ways in which programs can be implemented outside of the government? How necessary do you think government intervention is in addressing this concern? And this concern being the racial wealth gap.